Hi, I'm Brian. So you either got here directly and you started watching this video, or you clicked through on a video where I was explaining how to use the velocity method with credit cards to pay off your credit card debt faster, saving you time and money. This is the Cash Back Cascade method, which allows you to pay off your credit cards much faster, and I'm going to explain how it works, and then we're going to look at how much you can save. And I'm going to show you something that most people don't realize. You're actually saving more than the online calculators show you, substantially more. So let me just walk through again in the previous video the actual velocity method and how it works. So during the course of a month, we're going to assume that you spend things at stores, gas, groceries, dog food, dry cleaning, whatever you spend during the month. In this example, we have a credit card at 30%, $20,000 balance. We're going to say that your mortgage and your car payment are being paid directly out of your bank account. You're not able to use a credit card, otherwise you have to pay fees. So we're going to say, okay, in this example, you have a $600 a month credit card payment. And so what you do is you take your $600 and you move it over to your credit card. Then the way the velocity banking works is you don't pay for your items out of your bank account anymore. So when you go, you don't take out your debit card. Instead, you put that away, you take out your credit card. Why? Because you also move this $3,000 over to the credit card. So in other words, you're moving this whole $3,600 over. So instead of paying for these items from your bank account, you're going to move the money from your bank, all of it, over to the credit card. And then you're going to pay for these items from the credit card. That's exactly how it works. So when you paid this down, you ended up with $16,400. And then as you paid these items, normally they added up to $3,000. Normally you paid out of your bank. So eventually, by the end of the month, it went back up to $19,400. And the reason velocity banking works is because you have an interest rate, and the interest is being calculated on $16,400 throughout the month, not on $20,000. Now it's going to go up slightly as you buy items, so it's somewhere between $16,400 and $20,000. But you get the idea. It works because the balance that it's calculating interest on is lower. Therefore, that's why the velocity banking works. Now I'm going to explain the Cash Back Cascade method, which is different, and then we'll marry these two together to show you the ultimate savings. In this example, you've got a $20,000 debt. It's a 30% credit card, and it requires you to pay every month a $600 a month payment. So here's what you do. Quite simple. You use, as we showed you in the previous screen, you use the method of velocity banking so that you use your credit card to pay all your expenses. Your bank account pays your credit card. What does that mean? Well, that meant that we were putting every month $3,000 onto the credit card. And then, of course, the next month we were paying it off because we're moving the money from the bank account. So we're not increasing our debt by $3,000. We're just paying for our expenses using the $3,000. So what you do is you get a cash back credit card. 2.5%, and I've got links in the description. There is an Alliant credit card, which will allow you to get 2.5. There is a Wells Fargo at 2%. There's a Fidelity at 2%. I think there's a Citi at 2%. There's a bunch of them that give cash back. The Alliant one, there's a trick to it, so watch the video, but you can get 2.5% back up to $10,000 per month spent. So if you're just spending $3,000 a month, you're nowhere near the $10,000 limit, you'll get 2.5%. That comes out to be $75. Now the way these work is you will see on your credit card that during the month you made those purchases, you got 2.5% back, you got $75. That's free money. And then all you do is you click to redeem your $75 online, and they'll say where you want it to go. Some of them might allow you to put it directly to the credit card. Others, you might have to have a checking account with them. You can move it there and then pay the credit card. So what does this mean? This means that you're now making an additional payment of $75, which is free money to you. So instead of $600, you're paying $600. You're making a payment of $600 plus $75, $675. Okay, so let's look at the numbers to see the difference between making the $600 payment and the $675 payment. So here's the difference between making the $600 payment versus making the $675 payment. Remember, the $75 is because you got the cash back every month using a cash back card. So we have here the number of months it's going to take to pay it off, how much interest you're going to pay, and the old method, the new method, and what you saved. So in the old method, which was essentially you were just using your bank account, you just made a $600 a month payment. It's going to take you 73 months, and you're going to pay $23,000 in interest, $23,539. The new method, meaning you're going to make that $600 payment, you're going to take the free $75 that the credit card gave you and apply that. So your payment's actually $675. It's going to take you 55 months instead of 73, and it's going to cost you $6,904 in interest. So what did you save? Well, you saved 18 months, and you saved $6,636. And if you look at it here, the interest plus the principal that you paid off, $43,529. Interest plus principal, $36,904. It's just a nice way of checking the math. And yes, the difference is $6,636. So simply by using a credit card, which gives you cash back to make your expenses, and then moving the money from the bank account to the credit card, you're going to save substantial amount of time and substantial amount of money. Now, two more things, and stay with this. At the very end, I'm going to have another video showing you how you can get even more than 2.5% back, how to really maximize the amount of money you get back every month. So this is what the online calculators don't show you. Are they doing it wrong? No, they're doing exactly right. They're telling you how many months you're saving and how much money you're saving. But exactly what are you doing, right? That's what matters. So you know the method, you know what you have to do. But on a monthly basis, under the old payment, you were making a $600 payment. I'm sorry, under the old method, where you just only made your credit card payment, it's $600. So each month, $600 came out of your pocket. It was gone, or out of your bank account. And it took 73 months. So how much money left your bank account? 600 times 73, which is $43,800. Now, under the new method, you got the extra $75. So your payment that you were making is actually $675. It's your $600 plus the $75. However, the $75 is free, right? That's coming from the credit card company. So $675 is going to the credit card, $600 is coming from you, $75 from them. So what's actually coming from you? $600. Now what's $600? Took you 55 months times 55 is $33,000. What's the difference between these two? $10,800. Wait a second. The calculator said you saved $6,636 in interest. That's true. But what actually came out of your pocket? 600 times 73 months or 600 times 55 months? It was this, right? So the difference is you actually saved, you actually sent in $10,800 less than you would have. So by using this method of taking your money from your bank account, putting it on the credit card, then buying all your items throughout the month with the credit card, and then paying off the credit card, etc., right? So you're not increasing your balance. Then you're getting the cash back. You got $75 cash back that was free, so that went to pay down the principal of the credit card, and the result of that was a substantial interest savings, but more importantly, over the course of time, you didn't spend $43,000, you only spent $33,000. It's a $10,800 payment. But wait, there's more. That sounds stupid, but it's true. The other interesting part about this is that using the velocity method, if you watched my previous video, if not, it's in the links below. By using that method, because you moved money onto the credit card from your bank account, that $3,600, that balance is less. So you got your $20,000, you take away $600, your balance is $19,400. They're calculating interest on that. And the example, it showed $20,000 minus the $3,600. Now it's $16,400. They're calculating the interest on that. What was that? Well, we showed that it was an average savings of $37 a month. So remember, the $600 is coming from you. The $75 is free because it's coming from the bank, the cash back. And by having the lower balance throughout the month, and we did an average, it was about $37. So now you're not just decreasing your monthly by $600, and you're not just adding another 75 free money from the bank, the interest is actually calculated to be less every month, which means more goes to principal. In that case, it's actually going to be $13,800 is what you're going to save. So, one more time. By moving the money onto the credit card, you've lowered the balance substantially. That means you're paying less interest. There's the savings. That goes to the principal of the credit card. Because more of the $600 is going to the principal because you're paying less interest. Then, using the Cash Back card, you got $75. So every month, you've been able to put $600 plus another $75 plus the $37 additional is coming out. And ultimately, what actually is coming out of your pocket, you're going to be saving $13,800. So not only do you want to use the Velocity credit card method, you want to use the Cascade method as well, the Cash Back Cascade. And then if you click this next video, I go into even greater detail on how to save and how to get back more than just $75 a month. Because the more you can get down, the more you're going to save over the long term. So please click this next video. I hope this has been helpful. It's explained the method and shown you how to pay off your debt substantially faster and save you quite a bit of money. Thanks for watching.